Hey guys, how are you? Vladimir Ribakov here from Traders Academy Club, and this video is the weekly forecast and analysis for the week 7 to 12 of June 2020. I hope you are well and you are safe in this new reality to all of us, that you enjoy your sunny days, at least the way they allow us to join. So I hope everything is well on your end. If you are new to this channel, so first of all, welcome to our community. I hope you will find it as a good educational and helpful place. I would like to invite you to subscribe to the channel. Just follow the subscribe button below this video and remember to enable the notifications so you are notified about all the ideas I upload during the week to this channel. As well, I would like to invite you to join our trading club, the Traders Academy Club, and to join our free Telegram channel. Both links could be found below this video in the description or in the pinned comment inside the comment section. As every week on Monday, I will publish the weekly forecast in a text format in a blog post. So what you have to do is just come to the blog vladimirribakov.com or come back to this very video and you will find a direct link to this post, which will be available for you on Monday, as I mentioned on the blog. So inside this text format, you would basically be able to see the summary of this forecast, the analysis from the video, written down as a post for you. So it will be split by instrument, and for your comfort, you can just follow up all these ideas. My team puts a lot of effort here for you, so I hope you find it useful, and it's always good to have such a text version to refer to that during the week as a reminder of levels and some expected moves according to the analysis. Okay, and I would like to ask your support. If you find this work, these ideas, such videos and posts helpful, please show your support back, hit the like button, drop some feedback in the comments, and your help is very much appreciated and very important to us and the channel, of course. I would also love to remind you this video and the text version are completely free for the community. So feel free to share them with anyone who you believe could enjoy from watching them and reading them. And thank you very much for your support and for your help in advance. So what is in today's list? Today I have the very interesting instruments list to share: euro dollar, euro franc, Aussie Kiwi, silver, cotton, and the UK 100 on the index. So let's begin. The euro dollar. Previous week I was expecting to see the 111, 112 as a temporary resistance, or at least a slowdown. We did have a slowdown here. The price was dancing back and forth. Personally, I would expect to see a bit deeper corrections before the continuation, but the idea was to get the temporary corrections, retraces before further continuation, which happened by itself after small pullbacks, not deeper ones. So here comes the question: what is next with the euro dollar? The way I see that, there is a good probability for this to become an active cycle with a massive bullish divergence on the bottoms. We do have a very good hold around this supportive zone and the area of 105 psychological zone. We got very close to there. The last divergence from the weekly is a bullish divergence also on these lows, and the daily bounces from a very strong zone. So we got the spike, which turned to be fake spike with the coronavirus official release. Then we got the very strong hold, and the biggest question is what's next here. I personally don't think it's over. I believe we will get the retraces eventually, and it will be just to see this continuation further. There are no ending signs currently on a daily, on a weekly, and not even on the 4-hour chart. So we do have here some slowdown on the histogram, but no reversal signs. We don't have false breakouts. We do not have three lower highs, lower lows to change the trend, to return back to the bearish trend, and which that makes me think that chances for that are yet bullish, and I would expect to see bullish continuation after retraces. So my view on the euro dollar remains bullish for the longer run, and these retraces should be used as opportunities to buy. If we take a look here on the zones of pivots, and once again I include the pivot levels as a request from my followers to show how important levels come inside general analysis. And if I can be helpful here, it's my pleasure. So definitely pay attention to the trend as it goes. This is the first time that the euro dollar just entered into a strong pivotal area. Okay, it did have it here, but again, you see the price was much lower than all these levels, and the first place it just entered this zone was here. Little bounce and continuation. Now pay attention to what is happening with all the supportive areas. They all go up. Okay, they are not even shrinking, and they expand. You see, from small distances, right? We expand the distances between the pivots, getting bigger and bigger, and here even increase, which makes sense, right? Because when the momentum on the market goes, the levels increase. But it's a very good visual representation of what's going on. And after this push, this is the first time where we reached a very important zone. So yes, I expect to see it coming back to the supportive areas later or sooner, and then I would go and look for continuation. And this continuation, I expect to see again, look at the distance. Okay, before real retraces take place, or trend change take place, the distance normally, there is no guarantee here, but normally it shrinks or get closer and closer to each other. You will see me showing that later on this video on other instruments. Okay, that's what makes me think that we do need to follow up these levels, the supportive zones, as they go. And as the week will begin and the new days will come in, you will see these levels coming closer and closer, and they will use us as a good zones to pay attention to. So the next one on the list is the euro franc. But before I do that, let me know, what do you think on the euro dollar? How do you expect it to move? What price ranges and directions would you expect from this pair? Let me know your views in the comment section below this video. And once again, if you find this video and ideas helpful, please show your support back. Hit the like button. Your support is very important for me, my team, and the channel, of course. And thank you very much in advance for your help. Now, very interesting thing to mention, sorry, the euro dollar, more than 80% of the retail traders are in average short price of around 110, 110.50. More than 80%. As we know, majority of retail traders attack on a simple logic. Whatever goes up has to go down, whatever goes down has to go up, right? Without any specific signs, mainly and basically just based on expectations. This by itself is risky, but what is very important to remember that the majority of retail traders attack it too early, normally. Okay, and that's what happens on the euro dollar as well. Now we start to see from around the 112.50, most of them backing up, hedging, right? Losing position, they cover up with a hedging position. So if they had a sell of one lot, for example, now they will buy one lot just to lock the loss rather than to control it, right? And this is the dangerous place normally for the retail traders. And I do expect once the price will start to move a bit lower, they will release the buys because they will start to believe the sells now begin, and that's the place to look for the continuation. Okay, so that's for the euro dollar. Now euro franc, as I said, now this was one of the most surprising pairs on the speed it had. In Traders Academy Club, we spotted this beautiful opportunity for buys with the 3 higher highs, higher lows, and this retrace to the downside, providing a bullish hidden divergence. Now that was the place where our analysis said, okay, likely we are going for the third leg. And in that case, we were right, and it went. The speed of this move was surprising, because normally this pair moves slower. But very interesting thing did happen here. On the daily cycle, the price reached its target, which is a 50%. But not just it reached it, it didn't respect it. It was there, and after a day it was not there. It cleaned the level, which probably increases the probability of a bigger cycle coming in play with this great move and divergence here, and it starts to be very interesting for a further continuation, a bigger continuation. So the way I see, that's how this pair is actually going to develop. And the way that the 4-hour chart forms the structure, there is a good chance that the first leg not even over. So likely to assume this would be the first leg, then correction, and only then even bigger move upside. Will that happen or not? Time will tell. But the bottom line as for now, that this pair is expected to continue higher after it traces. And as long as, I would say, this trending wave holds above the area of 61.8, and we do not see a straight move below, this would be a warning sign, right? If it's one straight leg through all the Fibonacci's, it is a warning sign. But as long as it did not happen, these corrections, retraces, should provide further continuation upside. So another very interesting thing, as I mentioned before, with the retail traders, the average price of short stands below 107 here, exactly at the moment that we spotted a bullish hidden divergence for trend continuation in Traders Academy Club reports. Now, why do I mention that? Because most of the retail traders attack too early. Most of the retail traders attack too early. And we are speaking here about 85% of retail traders. Okay? And only recently, from above 108, 108.50, they started to back up with, again, hedging, which is by itself a wrong direction. So that's pretty much where the blockage normally happens. The price make some sort of retraces or corrections, temporary stoppage before further continuation to the original direction. So unless there will be a big surprise on the market, the euro franc is definitely an interesting opportunity from my point of view to follow up. And like the euro dollar, look what happened with the distances. It opens up. But the distance between the pivots levels, support resistances, and the pivot himself, it widens. And this is the first time this push where we entered, as you can see, a wide, strong range of several days in a row resistance. Now, the way I pay attention to pivots, personally, I don't say it's better or not, but this is the way I pay attention to. It's not a one level, not one touch or anything like that. I always work with zones. And the moment we start to see many different levels from different days and weeks coming together in the same place, that's where the zone starts to get some weight and value to pay attention to. And this is why I do expect the price to temporarily stop, ideally to deliver some corrections before continuation. And these levels should follow up as the price goes and deliver a good dynamic supportive zone. Next one on the list is Aussie Kiwi, but before, let me know, how do you see the Euro franc and what would be your expectations there? Are you in a bullish direction, or are you in the one of those who carry some sells? Let me know in the comment section. And the next one, Aussie Kiwi, and this one finally moves and moves very, very well. So we have a beautiful first trending structure here. As I discussed, for those of you who follow on the weekly analysis videos, then a couple of weeks ago we discussed about the possibility to clean this weekly level by another false breakout, and that's what happens here. Now look what happens here. Not just it's a clean of weekly level, but look at this beautiful engulfing, very strong engulfing with a massive divergence which rounds even further. After the engulfing, we got a beautiful verification candle to close below the engulfing low, and now 3 lower highs, lower lows in a row, red ones. Reminds the pattern of 3 black crowds, opposite to the 3 soldiers, 3 white soldiers. So what do we have with that? We have the Aussie Kiwi developing trending structure, making pullbacks, and just to continue. So the way I see that, that's pretty much how the price should develop. This likely to be the first leg from the supportive zone or slightly lower. Likely to assume we're gonna see some corrections and further on for continuation. Aussie Kiwi was also one of the instruments I shared. Let me show you here. I shared during the week in my Trading View channel. Also, it's available for you to watch in the community. And this was one of the opportunities we spotted. 3 lower highs, lower lows, retraces, and the expected continuation lower. And so far, this pair been very good with us. That's the pullbacks we were looking for to the desired zone and continuation. And from my point of view, and as long as this top holds, the price behavior should be developing in this way, and the bearish momentum, again, from my point of view, remains on. Okay, that's the Aussie Kiwi. I find it very interesting, and for all those of you who follow and got involved, carry on and enjoy the movement. Just remember to manage your exposures and your positions. Now I want to dig deeper and to go to the other interesting instruments, and that's the silver and the cotton. The way the silver behaves, from my point of view, currently brings the temporary correction before further continuation upside, ideally towards the level of 90 up to 20. So the way I see that, and I might be wrong here, but this was my analysis, and I expect here correction. Now I shared with you during the week on YouTube channel, my silver trade. Right now on the right top corner you would find it. You can click to watch the analysis directly there. And I explain why I expected the short-term corrections. That's what I expect from the pair to see, correct? Provide the bullish continuation sign, ideally close to this area, maybe even a bit further, and then look for this bullish continuation. The 1 hour chart was the place where we spotted these reversal signs initially, which extended a bit, then 2 waves correction, and all the rest is history. We got a beautiful movement. And as long as this movement goes, let it. Then again, with the corrections to happen, to complete, and bullish signs to take place, that's the place where I expect to see the silver continuing further. Now, very interesting levels to pay attention here. Look, from a massive zone that we entered, right? Now, as you remember, I mentioned before, from wide ranges, once it shrinks, you see what happens? Once we shrink, that's the place where you know that we're running into a slowing down momentum. And from this box of resistances on the according to the pivots, we got a beautiful correction zone. Now pay attention to what level we enter here. And again, it's not one visit. That's the most important, not just one touch. The zone. Pay attention to the zone. Okay, so as for now, the supportive zones are wide, right? And they get wider and wider. So as they will shrink, this would be your understanding that the chances for the bullish continuation get higher. Of course, I'll follow up this one in my daily live market analysis in Traders Academy Club. For all those of you who follow up, we are going to keep an eye on this instrument as it's super interesting. The next one which I want to cover is cotton, but before that, what do you think about the silver? How do you find this one? Bullish, bearish, and where to? And thank you very much for letting us know in advance. The next one is cotton. Cotton started for us as a very interesting, at the end of May, just a couple of weeks ago or so, we had this analysis with the weekly psychological level bullish divergence that came in place. And the trending structure that started to develop. We expected to see retraces and continuation. And here we are, expanding this way. Okay, so what is happening with cotton and how do I expect it to continue? So the cycle here remains the same from my point of view. This is a triple cycle and a bullish divergence, a massive hold on psychological level of 50. And mainly the turnaround by making 3 higher highs, higher lows, returning to bullish divergence. So we have reached the zone of 200 moving average, which likely to assume would have its own impact, at least on the shorter term. But for the longer term, from my point of view, we are here to continue higher with the weekly cycle. So retraces, from my point of view, should deliver further continuation. I expect the cotton to continue higher. Again, retraces are welcome, but they should be the one that will provide the opportunity to ride this momentum. And the last one for today, the UK 100, or as we call that, the FTSE. It has many other ways. That's how I call that and pronounce it. So we are developing here the ABCD correction. And this is one of the indices that still respect this zone. Now, we have this massive gap, which is now closed. We have still the possibility of gaining the divergence. And we have the dynamic 200 moving average here. I would definitely pay attention to the development. The 4-hour chart by itself is slowing down on these legs, as you can see. So the ideal scenario here is to see the price rounding, creating fake highs, false breakouts, and mainly turning to create the lower highs, lower lows. Because as you can see, what happens right now after it became like a 3 higher highs, higher low structure, the whole thing here turned to be, as you can see, again, higher highs, higher lows. I'm not talking about the distance of the highs or lows in that case. What I'm talking here about, a very simple definition of uptrend. I'm not talking about the ratios between waves and are they valid for buys or sells. No, I'm talking about the simple definition of a trend. And as the highs goes up and the lows goes up, this is an uptrend, and that's why we do want to see a slowdown and then turn around. We do need to see the market manage to create lower highs, lower lows. One of the most popular mistakes traders do, especially the beginners, they attack without reasons. I expect to see something, so let's attack it. That's dangerous. You do want to see fact on the chart. Okay? Very important. Just expectations do not lead the market. The way the price behave does. Remember that. Okay? So now I want to show you here also the levels. They are very important. Now look what happens here. Okay? We look at this wide zone which shrinks and now shrinks even more. That's what we want to see. That's how slowdown starts to look like. Okay? And again, from gaining momentum to reducing momentum. That's what you will want to see. Now we enter the very, very strong zone, as you can see. Very powerful area for the first time. And it's, no, why it's not drawing? Here. And now it's important to see how the price would react on these levels. If we manage to see the reversal signs, the false breakouts, the divergence completes, and the lower highs, lower lows start to be created, that's our time to start and look for opportunities to be involved. So from my point of view, the FTSE on the UK 100 is one of the interesting pairs to pay attention to for a slowdown and a possible turnaround to start building up. Okay? Very important thing, all that is relevant as long as we hold here the possibility of the divergence ratio between these two waves. If that's gone, the view is gone, and we will have to reanalyze and see how it behaves. Very, very important. Let me know, what do you think about this instrument, and please share your view in the comment section below the video. Now, that's all for this week. For full list of the instruments we work with, we trade and we follow, I invite you once again to join the Traders Academy Club. The link could be found below this video in the description or in the pinned comment in the comment section. And that would be all for today. Thank you very much for your time watching this video. I hope you find it useful, helpful, educational. Feel free to spread the word and share it with anyone who you want. It's open for the community. My hope is that it helps as many as possible. I wish you a fantastic week ahead. Please stay safe, be well, and I'll see you during the week with the short-term ideas I share with you in my channels. And you can follow us in every channel: YouTube for daily videos, the Trading View for daily posts, and of course my blog where we upload every. In this blog you will find all the things that you simply need: the ideas, the posts, the videos, and all the rest. Also, I would like to remind you, or if you are watching us for the first time, to let you know that here under Forex Education, you would be able to find free tools, free ebooks Very, very, very important, and complete guides for advanced and beginner traders, as long as many other useful materials. So that's again, that's all for today. Thank you very much for your time. I wish you a fantastic week ahead, and I'll see you during the week. Yours, Vladimir Ribakov, Traders Academy Club.